Hi everyone, welcome back to yet another session of Learning Simplified. In this session, we are going to understand more about direct debits. So before we go to direct debits, let's understand a simple payment transfer wherein a person on the left transfers money to the person on the right. So in this, the payer initiates a payment from his bank, known as the remitter bank. The remitter bank in turn forwards the payments request to the beneficiary in the form of an MT103 or a PAX 008 or an ACH file. The beneficiary bank on receiving it will credit to the beneficiary. This is a very simple case of a payment transfer, otherwise known as a credit transfer. So here, the person or the remitter is initiating the payment and the money is received by the beneficiary. But what happens if it's vice versa? In case the payment is not initiated by the remitter, but in case it is initiated by the beneficiary. So let's talk about this example, wherein a direct debit is a financial transaction initiated by the creditor, which is on the right-hand side, via its bank, the creditor bank, to collect funds from a debtor bank with the debtor bank as agreed between the debtor and the creditor. Now, this might sound a mouthful, but let's understand this in deeper detail. So what are the use case? In which use case would a creditor want to initiate the payment? Examples are insurance payments, utility payments, and bank EMI payments, wherein the beneficiary, in this case, the bank or the insurance company or the electricity company, would want to initiate a payment to withdraw funds from the remitter for the monthly bills. So this is known as a debit transfer or a direct debit. So how does it work? Step one, the creditor, in this case, an insurance company or the bank, sets up a mandate with his bank. Okay, that's known as the creditor's mandate. Step two, on the designated day, Bank A sends a request to Bank B to debit funds from the debtor. Okay, and here the creditor would be credited with the future value date. So the creditor gets immediate funds. However, the funds are not available because it is credited with the future value date, probably 2 days. The transfer in step 2 happens in the form of a PAX 003 if it's ISO compliant, or a flat file, or an MT104. Once the Bank B receives the message, which is either PAX 003 or the flat file or the MT104, it debits the debtor, post-validating it against the debtor agreement previously signed by the debtor. So it's very important that the debtor signs up an agreement with the bank, right, with his bank. Now, what does the mandates contain? We are going to have a look at it. But there should be an agreement by the debtor with his bank saying that on so-and-so date, this beneficiary is going to debit my account. So this is a pre-authorization approval which the debtor will give to his bank. So that's very important, because if it is not there, then the debit would fail. And if the debit fails, we are going into step 4. Any failure, a reject would be sent by B to A. And what happens here is that the initial credit, which was there in step 1, would get reversed. Right? Now, why would a failure happen? Could be due to multiple reasons. Number one is that the debtor's agreement is not in place or it has got expired. Secondly, the debtor's account has been frozen, or it's invalid, or it's dormant, or doesn't have sufficient funds. So these are the cases of failures. Now, one interesting thing to note here is that if that doesn't fail and a reject is not sent by Bank B to Bank A, it is deemed to be a success. So whenever the Bank B incoming PAX 03 is a success, there is no successful notification sent to Bank A. It is deemed to be successful, right? But if it's a failure, then Bank B has to necessarily send out a reject message, and the reject message, Bank A has to process it and reverse the original payment. That's very important. Otherwise, the initiator will get the benefit of the funds. So this is how the direct debit looks like. Now, we spoke about the mandate. What are the key points in the mandate? So when the debtor sets up his mandate with this bank, he specifies his account number, the creditor, the beneficiary's account and bank code, what's going to be the amount or the max amount which would be debited, expiry date or a range of dates, the start and the end date when the agreement would be valid, probably a transaction currency, This shows a sample MT104 message, wherein if you see 50A contains the creditor, 52A contains the creditor's bank, then you have the debtor's bank, and this is the debtor. And there is a small note, send it to receiver information. So in this case, the bank B is sending a message to bank A to debit the account mentioned in 59A and credit the creditor's account mentioned in 50A in the creditor's bank. So this is a very simple example of an MT104, which of course now in the ISO context has been replaced with BAC 003. Hope this gave a good understanding of direct debits. In the next session, we're going to understand more about the US RTP as part of the 4th session of the workshop series on instant payment. So till then, see you. Thank you.